Before we begin, a quick and important disclaimer. The content in this video is for informational and educational purposes only. It is not financial advice, nor should it be taken as a recommendation to buy, sell, or hold any cryptocurrency or asset. The crypto market is extremely volatile and carries a high degree of risk. You should always conduct your own thorough research and consult with a qualified financial professional before making any investment decisions. Your financial situation is unique, and any action you take based on the information in this presentation is strictly at your own risk. We are not liable for any losses you may incur. Imagine it's early 2021. You've been hearing about this joke coin, this meme called Dogecoin. It's absurd. It has a picture of a dog on it. But you've also been seeing your friends, people on Reddit, people on Twitter making insane amounts of money. Life-changing money. So you think, what the heck? You throw in $1,000, maybe $5,000. An amount that feels a little scary but also exciting. And it works. The price starts climbing. Every time you refresh your portfolio, you're richer. A few weeks later, the ultimate catalyst is announced. Elon Musk, the techno king of Tesla, the real-life Tony Stark, is going to host Saturday Night Live. He's been tweeting about Dogecoin constantly. He calls himself the Doge Father. The hype is unimaginable. This is it. This is the moment Dogecoin goes from a joke to $1. From the moon to Mars. You feel like a genius. You tell your friends, your family. You start mentally spending the profits. The show starts. And then it happens. He's in a sketch. He's asked, what is Dogecoin? And he looks straight at the camera and calls it a hustle. The word hangs in the air. You check the price. It's a vertical red line. A bloodbath. In the span of a single hour, the coin plummets over 30%. That $1,000 you put in? It's taking a nosedive. The dreams of a new car or a down payment on a house evaporate in real time. You just got played. And you're not alone. Millions of people around the world experience this exact same gut-wrenching roller coaster, all orchestrated, intentionally or not, by the whims of one man and his Twitter account. This is not a normal market. This is not the stock market your parents invested in. In the world of cryptocurrency, a single tweet from the right person can be more powerful than a Federal Reserve announcement. It can create and destroy billions of dollars in wealth in the time it takes you to read 280 characters. And no one has wielded this power more effectively, more chaotically, and more consequentially than Elon Musk. For years, investors have been caught in this cycle. One day, he's a hero, sending their portfolios into the stratosphere. The next, he's a villain, crashing the market with a casual meme. Feels random. Feels like gambling. It feels like you're a pawn in a game you don't understand. But what if it's not random? What if there's a pattern? What if there's a method to the madness? That is the core question we are going to answer in this video. This isn't about whether you love him or hate him. This is about understanding the mechanics of modern influence. We are going to dissect the Elon effect. We will break down his most famous market-moving tweets piece by piece. We'll analyze the language he uses, the timing of his posts, the memes he chooses, and the psychological triggers he pulls. We will look at the hard data, the charts, the volume spikes, the exact chain of events to build a framework. Playbook. By the end of this presentation, you will no longer see his tweets as random noise. You will see them as signals. You will understand how a billionaire CEO became the single most influential retail voice in financial history, and more importantly, you will learn how to protect your capital, spot the narratives before they take hold, and navigate a market that is increasingly driven not just by fundamentals, but by personality. So how did we get here? How did one person gain this unprecedented level of market influence? It's a perfect storm of three powerful forces. First, the nature of the crypto market itself. Unlike the stock market, which is dominated by massive institutions, hedge funds, and professional traders, crypto, especially during the last bull run, was driven by a tidal wave of retail investors. Everyday people like you and me. This audience doesn't read quarterly earnings reports. They read Reddit threads and Twitter feeds. They don't invest based on price-to-earnings ratios. They invest based on stories, on memes, on a feeling of being part of a movement. They're looking for a leader, a champion. Second, you have the cult of personality. Elon Musk isn't just a CEO. He's a modern-day folk hero to millions. He's building rockets to colonize Mars, he's creating electric cars to save the planet, he's promising to put a chip in our brains. He embodies the very spirit of futuristic, high-risk, high-reward thinking that defines the crypto space. When he speaks, people don't just hear a CEO. They hear a visionary. They feel like they're getting a signal from the future. And he cultivates this persona masterfully. He doesn't communicate through polished press releases. He communicates through spicy memes, inside jokes, and direct, unfiltered replies to his followers. He makes them feel like they're on the inside. They're part of his tribe. And third, you have the power of the platform. Twitter, now X, is the global town square. It's a real-time fire hose of information where narratives are born and killed in minutes. Its algorithm is designed to amplify emotion, controversy, and virality. A single provocative tweet can reach tens of millions of people instantly, creating a feedback loop of hype and panic that market makers simply cannot ignore. When you combine a market of hopeful believers with a charismatic visionary on a platform built for viral explosions, you don't just get influence. You get a weapon that can be aimed at any asset he chooses. And in 2021, he aimed it squarely at the king of all crypto, Bitcoin. To truly understand the Elon effect, we have to go back to the moment he went from a crypto enthusiast to the market's main character. Let's set the stage. It's February 8, 2021. The crypto market is on fire. Bitcoin is roaring past $40,000, a new all-time high. The mood is pure euphoria. Then the news breaks. It comes not from a tweet, but from a formal SEC filing, a document that sends an earthquake through the entire financial world. Tesla, one of the most innovative and valuable companies on the planet, has purchased $1.5 billion worth of Bitcoin. Let me repeat that. Not a hedge fund, not a crypto company. Tesla. Elon Musk's Tesla. And there was more. The filing also stated that Tesla would begin accepting Bitcoin as payment for its vehicles. This was the ultimate validation. This wasn't just a random celebrity endorsement. This was a Fortune 500 company, led by the world's richest man, officially adding Bitcoin to its corporate treasury. It was the institutional adoption that Bitcoin believers had been dreaming of for a decade. The message was clear. Bitcoin is not a toy. It's a legitimate treasury asset, a viable store of value on par with gold. The market reacted exactly as you'd expect. Bitcoin's price exploded. It shot up nearly 20% in a single day, adding over $100 billion to its market cap. The mainstream media went into a frenzy. CNBC, Bloomberg, The Wall Street Journal, everyone was talking about it. If you held Bitcoin, you felt vindicated. If you didn't, you felt an intense wave of FOMO, the fear of missing out. This single move cemented Elon Musk as the undisputed hero of the bull run. He had put his money, his company's money, where his mouth was. He had built a bridge between the weird, wild world of crypto and the buttoned-up world of corporate America. He was our guy. And for 3 glorious months he played the part perfectly. Everything was going to plan. The price of Bitcoin soared, eventually reaching a staggering $64,000. It seemed like nothing could stop the momentum. But behind the scenes, a narrative was shifting. And Elon was about to pull the rug out from under the entire market, using the very same influence he had just used to legitimize it. The date was May 12, 2021. The crypto market was electric. Bitcoin was trading comfortably above $55,000. Retail investors who had bought in just months earlier were seeing life-changing gains. The mainstream narrative, championed by Elon Musk himself, was that Bitcoin had arrived. It was institutional, it was the future of corporate treasuries, and you could even buy a Tesla with it. The euphoria was palpable. It felt like the party would never end. And then at 6:06 p.m. Eastern Time, a single tweet dropped like a digital guillotine. Came from Elon's account, and it was a statement from Tesla. The text was cold, corporate, and devastating. It read, "Tesla has suspended vehicle purchases using Bitcoin. We are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel." The market froze. For a split second, there was disbelief. Had his account been hacked? Was this a joke? But it was real. And the implications were catastrophic. The very man who had put rocket fuel in Bitcoin's engine had just slammed on the brakes and thrown it into reverse. The tweet continued, twisting the knife. It said that while cryptocurrency was a good idea on many levels, it could not come at a great cost to the environment. And then the final blow. Tesla would not be selling any of its Bitcoin, and intended to use it for transactions as soon as mining transitioned to more sustainable energy. But the damage was done. The signal had been sent. The kingmaker had declared his own creation unclean. What happened next was a bloodbath. The price of Bitcoin, which had been hovering around $57,000, began to plummet. It didn't just dip. it fell off a cliff. Within an hour, it had lost over 5%. Within a day, it had crashed below $47,000, wiping out over $500 billion in market capitalization. It was one of the single most violent price drops in Bitcoin's history, and it was triggered by a single man and 280 characters. A cascade of liquidations began, as over-leveraged traders who had bet on the price going up were wiped out in an instant. Billions of dollars in positions were forcibly closed, adding more selling pressure and accelerating the downward spiral. The fear was thick enough to cut with a knife. The entire market, which mere hours before had been defined by extreme greed, was now gripped by extreme terror. But here's the question that everyone started asking, the question that still echoes in the crypto space today. Did Elon Musk, a man who runs a space exploration company and builds batteries for a living, really just discover that Bitcoin mining used a lot of energy? Seems unlikely. In fact, it's borderline impossible. The energy consumption of Bitcoin's proof-of-work algorithm is not a secret. It's one of its most well-known, most debated, and most fundamental features. For Tesla to have conducted even the most basic due diligence before investing $1.5 billion, they would have had to analyze this issue from every possible angle. The idea that this was a sudden shocking revelation to Elon Musk is simply not credible. So let's break down what he was talking about. Bitcoin runs on something called proof of work. Think of it like a global decentralized lottery. Every 10 minutes, incredibly powerful computers all over the world, called miners, compete to solve a complex mathematical puzzle. The first one to solve it gets to add the next block of transactions to the blockchain and is rewarded with a certain amount of new Bitcoin. This process is what secures the network. It makes it incredibly difficult and expensive for any single person to attack or tamper with the transaction history. But that security comes at a cost: energy. All those computers solving puzzles consume a massive amount of electricity. That's the core of the environmental argument. And it's a valid concern. At its peak, the Bitcoin network was estimated to consume more electricity than entire countries like Argentina or the Netherlands. The critics, and now Elon Musk, pointed to this and painted a picture of a digital currency literally boiling the oceans. But the story is far more nuanced than that. The Bitcoin mining industry is fiercely competitive. The biggest cost for a miner is electricity. Therefore, miners are constantly on a global hunt for the cheapest power on the planet. And what is often the cheapest power? It's stranded energy. It's hydroelectric power in a remote region with no other customers. It's natural gas being flared off at an oil well because it's not economical to transport. It's excess solar and wind power generated at times of low demand. A significant portion of Bitcoin mining was, and still is, powered by renewable or otherwise wasted energy sources. The Cambridge Center for Alternative Finance estimated at the time that around 40% of mining was powered by renewables, and other studies put that number even higher. So was Elon's tweet a genuine, if naive, expression of environmental concern? Or was it something else? A convenient excuse to manipulate the market? A way to pivot his influence away from Bitcoin and towards something else he could control more directly? The hypocrisy was glaring. Tesla, a company whose entire brand is built on sustainability, had bought $1.5 billion of Bitcoin, held it for months, announced they would accept it for payments, and only after all of that did they suddenly become concerned about its energy use? The timeline just doesn't add up. It felt disingenuous. It felt like a betrayal to the very community that had embraced him as a visionary leader. He wasn't just some celebrity shilling a product. He was the CEO of a major publicly traded company who had put Bitcoin on his balance sheet, giving it the ultimate institutional stamp of approval. And then he took it all back. This single event solidified what is now known as the Musk effect. It proved, beyond a shadow of a doubt, that a single individual's social media feed could dictate the short-term fate of a trillion-dollar asset class. It was a terrifying display of centralized influence in a world supposedly built on decentralization. The tweet didn't just hurt Bitcoin. It dragged the entire crypto market down with it. Ethereum, Cardano, XRP, everything was deep in the red. Portfolios that had been up hundreds of % were suddenly decimated. The dreams of a new financial paradigm were replaced by the harsh reality of panic selling and margin calls. The market was reeling, confused, and angry. The man they had hailed as their champion had become their villain overnight. He had legitimized their world and then declared it morally bankrupt in the same breath. But if you thought this was the end of Elon's meddling in the crypto markets, you were mistaken. This wasn't an exit. It was a pivot. He had just demonstrated his immense power to move the biggest, most established cryptocurrency in the world. Now, he was about to turn his attention to its polar opposite, a cryptocurrency that was never meant to be serious, a project that started as a complete joke, a meme. He was about to unleash the full force of his influence on a coin with a picture of a dog on it. And in doing so, he would kick off one of the most absurd and unpredictable chapters in the history of finance. And so it began. Not with a detailed white paper, not with a press conference, but with a simple, almost cryptic message on December 20, 2020. Elon Musk, a man who builds rockets and electric cars, typed out 4 words that would echo across the financial world. One word, Doge. That was it. No explanation. No context. Just the name of the joke coin. In the minutes that followed, the price of Dogecoin didn't just nudge upwards. It exploded. A 20% jump almost instantaneously. For the seasoned crypto traders, it was a familiar, if slightly bizarre, signal. But for the millions of Musk's followers, it was a call to arms. A cryptic clue from the oracle. This wasn't a financial advisor giving a tip. This was Tony Stark pointing at a lottery ticket and giving a knowing wink. The fuse was lit. But this was just the appetizer. A single tweet could be a fluke, a momentary distraction. Musk, however, was just getting started. He began to systematically weave Dogecoin into his public persona. He wasn't just tweeting about it, he was building a mythology around it. In February 2021, he tweeted a picture of himself holding up his dog, a Shiba Inu, in a scene mimicking the Lion King, with his own face photoshopped onto the wise mandrill Rafiki, and the Doge meme photoshopped onto Simba. The caption, "You're welcome." The price surged again. Then came the barrage. Dogecoin is the people's crypto, he declared. He wasn't positioning it as a competitor to Bitcoin, the digital gold for the wealthy. No, this was different. This was the coin for the little guy. The coin for the masses. The coin that didn't take itself seriously, and by extension was a middle finger to the stuffy, gate-kept world of Wall Street. He even ran a poll asking his followers if Tesla should accept Dogecoin. The result was an overwhelming yes. Each tweet, each meme, each poll acted like another stage on a rocket booster, pushing the coin's value to ever more ludicrous heights. He was crafting a narrative so powerful, so simple, that it was irresistible. Forget market capitalization, forget utility, forget tokenomics. The story was, Elon likes the funny dog coin, and he wants us, the regular people, to win. It tapped into a deep well of post-2008, post-GameStop resentment against the financial establishment. Buying Dogecoin wasn't just an investment, it was an act of defiance. It was a vote for a new, weirder, more democratic future. And at the head of this populist digital army was its newly crowned general, the self-proclaimed Dogefather. The mania reached a fever pitch with the announcement that Musk would be hosting Saturday Night Live in May 2021. This was it, the moment the entire crypto world had been waiting for. The Dogefather was ascending to the biggest stage in American pop culture. The speculation was rampant. What would he say? Would he wear a Dogecoin t-shirt? Would he open the show by saying "to the moon"? The hype was not just on Twitter or Reddit, it was on mainstream news. Financial pundits were seriously discussing the potential impact of a comedian's monologue on a global asset. In the days leading up to the show, the price of Dogecoin soared to an all-time high of nearly 74 cents. People were taking out loans, pouring in their life savings, convinced that this was their one-way ticket. The narrative was complete. Elon, the people's champion, would use the SNL platform to legitimize the people's crypto, sending it rocketing past $1 and into financial legend. The world was watching while it's open, ready for the signal to launch. The show began. Musk walked onto the iconic stage at Studio 8H. The monologue was awkward, filled with self-deprecating jokes about his eccentricities. But the Dogecoin army wasn't there for the comedy. They were hanging on every word, waiting for the mention. It finally came during the Weekend Update segment. Musk, playing a fictional financial expert named Lloyd Ostertag, was repeatedly asked, "So what is Dogecoin?" He gave a series of increasingly elaborate, meme-filled explanations. He called it the future of currency, an unstoppable financial vehicle that's going to take over the world. The price ticked up. The hype was real. But then the anchor Michael Che pressed him one last time, cutting through the jargon. "So it's a hustle?" Musk, as Lloyd Ostertag, paused, a slight smirk on his face, and conceded, "Yeah, it's a hustle." And with that one word, the dream shattered. It was a 5-letter word that acted like a pin to a hyperinflated balloon. The market didn't just dip. It fell off a cliff. In the minutes and hours that followed, Dogecoin's price plummeted by over 30%. Billions of dollars in value vaporized live on national television. The rocket that was supposed to go to the moon had just exploded on the launch pad, and its chief engineer had seemingly lit the match himself. The social media platforms that had been buzzing with euphoric to the moon memes were suddenly flooded with panic, anger, and screenshots of catastrophic losses. People who had been dreaming of paying off their mortgages and buying Lamborghinis were now facing financial ruin. The whiplash was brutal. The hero, the Dogefather, had just told the world that their beloved people's crypto was, in fact, a hustle. What did he even mean? The debate raged. To critics, it was a moment of stunning, perhaps unintentional honesty. A hustle implies a scheme, a swindle, an enterprise of questionable legitimacy. They saw it as Musk finally, perhaps accidentally, admitting that the whole thing was a giant pump-and-dump scheme he was perpetrating on his own followers. But to his defenders, it was just a joke. They argued hustle was being used in a modern positive sense, meaning something you work hard at, your side gig, your grind. They claimed he was just being ironic, playing a character on a comedy show. But in the world of high-stakes, high-speed crypto trading, nuance is the first casualty. The algorithm doesn't understand irony. All the market heard was the CEO of Tesla, the man who wants to colonize Mars, effectively calling the asset he had been promoting for months a sham. The damage was done. The magic was gone. The SNL appearance wasn't the coronation everyone expected. It was a public execution. And the Dogecoin army was left standing in the wreckage, staring at their decimated portfolios, asking one simple question. Had their general just betrayed them? Or was this all part of an even bigger, more incomprehensible plan? The saga of the Dogefather was far from over. To understand what happened next, you have to understand the psychology of a market crash. It's not just numbers on a screen turning red. It's a collective, gut-wrenching moment of panic. And after the Saturday Night Live debacle, the Dogecoin community was in a state of shock. They had followed their leader into battle, convinced of a glorious victory, only to be ambushed. The man they called the Dogefather had, on national television, called their shared dream a hustle. The word echoed in every crypto forum, every Discord channel, every panic text message. It was a verbal dagger. But in the chaotic world of crypto, there's no time to mourn. Because while the Doge army was tending to its wounds, Elon Musk was reloading. He was preparing to aim his cannons not at a rival meme coin, but at the king itself, the Titan, the undisputed multi-trillion-dollar behemoth of the crypto world, Bitcoin. To grasp the sheer magnitude of what he was about to do, we need to rewind just 3 months. In February 2021, the crypto world had its watershed moment. Tesla, the darling of Wall Street, the symbol of future-forward innovation, announced it had purchased $1.5 billion worth of Bitcoin. Let that sink in. This wasn't some tech bro buying a few coins. This was a Fortune 500 company, led by the most famous CEO on the planet, adding Bitcoin to its corporate treasury. The news was an earthquake. It was the ultimate validation. For years, Bitcoin had been derided by the mainstream as magic internet money, a tool for criminals, a bubble waiting to pop. But now, Elon Musk and Tesla were effectively saying, no, this is the future of finance. This is a legitimate store of value. The price of Bitcoin skyrocketed. It broke $50,000 for the first time ever. A tidal wave of institutional money followed, scared of missing out. Elon Musk wasn't just a Dogefather. He was now perceived as the high priest of the entire crypto movement, ushering in an era of mass adoption. He was Moses leading his people into the promised land of mainstream acceptance. He even added the simple hashtag Bitcoin to his Twitter bio. It was a digital flag planted on a new frontier. And for 3 glorious months, the market soared. Every dip was bought. Every critique was silenced. The bull run felt unstoppable. And Elon was the conductor of the orchestra. Then came May 12, 2021. With no warning, a tweet appeared. It was a screenshot of an official Tesla statement. The language was cold, corporate, and utterly devastating. It read, "Tesla has suspended vehicle purchases using Bitcoin. We are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel." The market froze. For a split second, nobody could process what they were reading. Was this a hack? A joke? The same man who had put $1.5 billion of his company's money into Bitcoin, the same man who had championed it as the future, was now publicly shaming it for its environmental impact. It felt like the Pope suddenly announcing he was an atheist. And then the panic hit. It was a digital bank run, a mass exodus. The price of Bitcoin, which had been trading around $57,000, began to plummet. It was a cascade of liquidations unlike anything the market had seen before. Within hours, it had shed 10% of its value. But this was just the beginning. The tweet wasn't a rock thrown into a pond. It was a stick of dynamite. It shattered the single most important thing in any financial market, the narrative. The narrative had been that Bitcoin was a technological marvel, a pristine asset, the hardest money ever created. Now, the new narrative, injected into the bloodstream of the global conversation by the world's most powerful influencer, was that Bitcoin was dirty, that it was boiling the oceans, that owning it was environmentally irresponsible. This wasn't just an attack on Bitcoin's price. It was an attack on its soul. And it came from the one person everyone thought was its greatest champion. Bitcoin maximalists who had praised Musk just weeks before now branded him a traitor, a manipulator of the highest order. They pointed out that Bitcoin's energy usage was a well-known, widely debated topic. Nothing about it had rapidly increased in the 3 months since Tesla bought it. So why now? Why this sudden public and incredibly damaging reversal? Was it a genuine, albeit hypocritical, change of heart about the environment? Or was it something else? Theories exploded across the internet. The most cynical one was also the most plausible to many: market manipulation. Had Musk and Tesla pumped the price with their initial purchase, only to dump it on the market and trigger a crash with a single tweet? The timing was suspicious. It felt calculated, felt strategic. But the real strategy, the true 4D chess move, was revealed in what came next. Because Elon Musk didn't just attack Bitcoin. He immediately offered a solution. Just one day later, on May 13th, he tweeted again. Working with Doge devs to improve system transaction efficiency. Potentially promising. And there it was. The masterstroke. The betrayal of the Doge community after SNL suddenly looked different. The attack on Bitcoin was no longer a standalone event. The pieces on the chessboard snapped into place, revealing a breathtakingly audacious strategy. This wasn't just a series of random impulsive tweets. This was a coordinated campaign. A declaration of war. Musk wasn't abandoning crypto. He was attempting a coup. He had used his influence to create a problem. Bitcoin is bad for the environment. Then, he immediately presented his preferred solution. Dogecoin is the answer. He was trying to perform a narrative assassination. He was attempting to kill the king and install the court jester on the throne. He framed it as a battle of technologies. He started tweeting about block size, transaction speeds, and energy consumption per transaction. He argued that Dogecoin, the currency that started as a joke, was technologically superior for payments than the multi-trillion-dollar Bitcoin network. To the experts, these arguments were flimsy, often comparing apples to oranges and ignoring fundamental trade-offs in security and decentralization. But to the general public, to the millions of followers hanging on his every word, it sounded legitimate. It sounded like the visionary genius was simply pointing out the obvious flaws in the old system and championing a better one. Think about the sheer audacity of this move. He had spent months building up credibility in the space, culminating in Tesla's historic buy-in. He used that credibility as a weapon. First, he created a crisis of confidence in the market leader, Bitcoin, causing its price and reputation to crumble. Then, into that vacuum of uncertainty, he pushed his chosen successor, Dogecoin. The hustle comment on SNL now seemed like a calculated move to shake out weak hands, to crash the price so he and other big players could accumulate more before the next big push. The Dogecoin community, which had felt betrayed just days earlier, was suddenly re-energized. Their general hadn't abandoned them. He had just gone off to fight a bigger dragon. He had to wound Bitcoin to make room for Doge. The betrayal was reframed as a necessary sacrifice. The Dogefather was back, and his plan was more ambitious than anyone could have ever imagined. He didn't just want to take Dogecoin to the moon. He wanted it to conquer the entire solar system, starting with planet Bitcoin. The crypto world was now split into warring factions, with battle lines drawn by a handful of 280-character messages. The Great Crypto War had begun, and Elon Musk had just fired the opening shot. The immediate fallout was nuclear. Within minutes of Musk's tweet, the crypto market, which had been a sea of tranquil green, turned into a violent blood-red tsunami. Bitcoin's price plummeted, not like a stone, but like a skyscraper having its foundations dynamited. It fell thousands of dollars in the time it takes to read a tweet. The digital air was thick with the screams of liquidated long positions, the silent, agonizing sound of billions of dollars in paper wealth vanishing into the ether. The Bitcoin maximalists, the hardcore believers who saw the cryptocurrency not as an investment but as a religion, were a hornet's nest that had just been kicked. And they swarmed. They unleashed a counteroffensive of unprecedented fury. They branded Musk a hypocrite, a manipulator, a central banker in a tech billionaire's clothing. They flooded Twitter with charts showing the carbon footprint of Tesla's global manufacturing operations, the environmental cost of mining lithium for his batteries, the energy consumption of the traditional banking system he was supposedly challenging. Hashtags like #CryptoIsFreedom and #BitcoinProtects trended globally. Prominent Bitcoin advocates, CEOs who had staked their companies' balance sheets on the digital gold, came out swinging. They called it a betrayal. They argued that Bitcoin mining was increasingly using renewable energy, that it was monetizing stranded energy sources that would otherwise go to waste. They painted a picture of Musk as a tourist in their world, someone who had dabbled, failed to grasp the profound implications of decentralization, and was now throwing a tantrum because he couldn't control it. But their arguments, while valid and nuanced, were also complex. Explaining the intricacies of the energy grid and the game theory behind proof-of-work mining is difficult in a 280-character soundbite. Musk had chosen his weapon perfectly. Bitcoin is bad for the planet. It was simple. It was visceral. And it was devastatingly effective. While the Bitcoin army was busy defending its capital, new armies were rising up on the periphery, emboldened by the chaos. The leaders of other cryptocurrencies, the so-called altcoins, saw their moment. For years, they had been living in Bitcoin's shadow, arguing that their technology was superior, faster, and more efficient. Now, the richest man in the world had just handed them the greatest marketing gift in history. Charles Hoskinson, the founder of Cardano, a major Bitcoin rival, was practically doing victory laps on YouTube. His community and others like it rallied. Their coins, which used a different system called proof of stake, used a tiny fraction of the energy Bitcoin did. Suddenly, they weren't just altcoins anymore. They were the green alternative, the ethical choice. The narrative shifted overnight. If Bitcoin's proof of work was like a giant gas-guzzling V8 engine, powerful, proven, but environmentally costly, then proof of stake was the sleek, silent electric motor of the future. The message was clear. Elon was right about the problem, but he was backing the wrong solution. The real future, they claimed, was their project. This schism sent shockwaves through the market, pulling capital away from Bitcoin and into these competing ecosystems, fueling a speculative frenzy known as alt season. The war was no longer a simple duel. It was now a multi-front battle royale, with dozens of factions vying for supremacy. And then there was the joker in the deck, the agent of chaos, Dogecoin. Musk wasn't just attacking Bitcoin. He was simultaneously propping up its most absurd rival. In the days and weeks that followed, he began tweeting about working with Dogecoin's developers. He claimed he was talking to them to improve the system's transaction efficiency. He called it the people's crypto. The absurdity was breathtaking. A currency that was literally started as a joke, featuring a picture of a Shiba Inu dog, was now being seriously championed by the man sending rockets to Mars. This wasn't just adding a new faction to the war. It was like introducing a clown army armed with rubber chickens and confetti cannons that somehow managed to be devastatingly effective. The Dogecoin community, which had always been about memes and good vibes, was energized into a fanatical force. They weren't fighting for technological supremacy or decentralized philosophy. They were fighting for their Doge father. They were fighting for the sheer, unadulterated fun of it all. And their collective buying power sent the price of Dogecoin to astronomical, logic-defying heights. It became a cultural phenomenon, a middle finger to the financial establishment and the serious, po-faced Bitcoiners alike. Elon had successfully divided the entire crypto space into three warring camps. The Bitcoin defenders, fighting for their digital gold. The altcoin armies, fighting for their supposedly superior technology. And the Dogecoin meme legion, fighting for the lulz. And he stood in the middle, conducting the symphony of chaos. But this war of words and memes had very real, very painful financial consequences. The market was hemorrhaging value. What Musk's tweet really did was light a match in a room filled with gasoline, and that gasoline was called leverage. For months, as Bitcoin's price had climbed relentlessly upwards, a new wave of traders had flooded the market. They weren't buying Bitcoin itself. They were using derivatives, borrowing massive amounts of money, 10, 50, even 100 times their initial capital, to bet on its price going even higher. This created a precarious house of cards. As long as the price went up, everyone was a genius. But Musk's tweet caused the first wobble. As the price dipped, these leveraged long positions began to get liquidated. The exchange's computers automatically sold their Bitcoin to cover their debt. This forced selling pushed the price down further, which in turn triggered the next wave of liquidations. It was a domino effect, a death spiral of forced selling that fed on itself. Billions of dollars were being wiped out every hour in a cascading chain reaction. Musk's 280 characters didn't just convince a few people to sell. He triggered a systemic deleveraging event, a great purge that brutally washed out the speculators and the tourists. It was a lesson taught in blood and red candles. The crypto market was a delicate ecosystem, and Elon Musk had just proven he could stomp on it like Godzilla whenever he pleased. The question on everyone's mind was, why? Was he just being reckless? Was he trying to manipulate the price to buy back and lower? Or was this part of a much larger, more calculated strategy? What nobody understood was that this was a masterclass in psychological warfare. Musk had brilliantly reframed the entire debate. He moved the conversation away from crypto's strengths, decentralization, scarcity, censorship resistance, and onto its perceived weakness: energy. It's hard to rally the public around abstract concepts like unconfiscatable money. It's incredibly easy to rally them around saving the planet. He had hijacked the narrative, forcing the most brilliant minds in the crypto space to play defense on his chosen battlefield. They were writing long technical essays about energy grids, he was posting memes. They were using logic, he was using emotion. And in the court of public opinion, emotion almost always wins. The market was on its knees, the community was at war with itself, and one man was tweeting through the chaos, seemingly enjoying the show. But this was far from his final move. The attack on Bitcoin's energy usage was just the opening salvo, a brilliant feint to soften the target. His next attack would be far more subtle and far more dangerous. It wouldn't target Bitcoin's body. It would be aimed directly at its soul. What is the soul of a cryptocurrency? It's not the code. It's not the blockchain. It's the story, the belief, the meme. Bitcoin's soul was forged in the fire of the 2008 financial crisis. Its story was one of rebellion against central banks, of mathematical certainty in a world of human error. Its meme was digital gold, a scarce, incorruptible store of value. It was serious. It was revolutionary. And it was this very seriousness, this identity as the world's first truly sound money, that Musk would target with the most absurd weapon imaginable: a joke. To understand the genius of Musk's next move, you have to understand Dogecoin. Created in 2013 by two software engineers, Billy Marcus and Jackson Palmer, Dogecoin was never meant to be taken seriously. It was a literal parody of the crypto craze. They took the code from Litecoin, slapped on the face of a Shiba Inu from the popular Doge meme, and set the supply to be infinitely inflationary, the exact opposite of Bitcoin's finite scarcity. It was a joke currency designed to mock the very idea of creating currencies out of thin air. And for years, that's all it was, a small friendly community that used the coin for tipping and charity, a forgotten relic of a bygone crypto era. But Elon Musk saw something else. He saw a blank canvas, an army without a general, a meme with untapped potential. While the world was reeling from his attack on Bitcoin's energy use, Musk began his pivot. It started subtly, a single-word tweet: Doge. The price jumped. Then another, a picture of him holding up the Shiba Inu like Simba in The Lion King. The price exploded. He wasn't just tweeting. He was conducting a symphony of mimetic warfare. He called himself the Doge Father. He promised to put a literal Dogecoin on the literal moon with his SpaceX program. Each tweet was a perfectly crafted piece of populist propaganda. This wasn't a complex white paper or a discussion of cryptographic security. It was a picture of a cute dog. It was a simple, powerful message that anyone could understand. And it was brilliant, because in doing this, Musk was reframing the entire crypto debate. He was creating a new narrative, a battle between two opposing forces. On one side, you had Bitcoin, the slow, expensive, energy-guzzling currency of Wall Street institutions and venture capitalists. It was old. It was complicated. It was for the rich. On the other side, you had Dogecoin, the fast, cheap, fun currency of the people. It was for the retail investor, the Reddit trader, the everyday person who felt locked out of the traditional financial system. He was positioning himself not as a billionaire CEO, but as a man of the people leading a financial insurgency against the establishment. And the establishment in this new narrative was Bitcoin. Think about the psychological mastery at play here. He had just spent weeks convincing his followers that Bitcoin was environmentally irresponsible. Now, he was offering them an alternative that wasn't just greener, but was also more accessible, more fun, and felt like a grassroots movement. He was weaponizing the very culture of the internet, memes, humor, and a shared sense of rebellion, and aiming it like a cannon at the heart of Bitcoin's identity. The market's reaction was nothing short of manic. From the start of 2021 to its peak in May, Dogecoin's price surged over 12,000%. 12,000%! Its market capitalization swelled from a few billion to over $90 billion at its zenith. It became larger than Ford, then Kraft Heinz, then Twitter itself. People who had thrown a few $100s into the coin as a joke were waking up as millionaires. Every news channel, every financial blog, every conversation at the dinner table was suddenly about this ridiculous meme coin with a dog on it. And at the center of it all, pulling the strings, was Elon Musk. This was the true attack on Bitcoin's soul. The energy debate was a distraction. The real battle was for the narrative. Bitcoin's core value proposition was its scarcity, its seriousness as a long-term store of wealth. Musk countered this with a narrative of utility and fun. He would tweet things like, "Fundamentally, Bitcoin is simply a less dumb form of liquidity than cash." Dogecoin, on the other hand, is a hustle. But he framed hustle not as a negative but as a positive. A scrappy underdog. He started talking about working with Doge developers to improve its transaction efficiency, to make it a viable medium of exchange for everyday purchases. He was attempting to perform a kind of financial alchemy. He was trying to turn a joke into the world's currency, not through technical superiority, but through sheer force of will and narrative control. He was betting that in the 21st century, the power of a meme could be stronger than the power of a mathematical protocol. He was betting that belief itself was the most valuable asset. If enough people believed Dogecoin was the future of money, then it would be. Why? Why would one of the world's most brilliant and busy individuals dedicate so much time and energy to pumping a joke currency? There are three dominant theories. The first and simplest is that he was just having fun. He saw an opportunity for the ultimate troll, a way to flex his influence and demonstrate, in no uncertain terms, that he could move multi-billion-dollar markets with a few keystrokes. It was a display of power, pure and simple. The second theory is one of pure self-interest. It's impossible to know for sure, but it's plausible that he or his companies had acquired a massive position in Dogecoin before he began his public campaign. If so, his actions would represent one of the largest and most audacious market manipulations in history, a pump-and-dump scheme on a global scale, hidden in plain sight behind a veil of memes and jokes. But the third theory is the most compelling, and perhaps the most frightening. It's the idea that he genuinely believed it. That Elon Musk looked at Bitcoin, saw its flaws, its slow transaction times, its high fees, its conservative development community, and concluded it could never become a true global currency for the people. He saw Dogecoin with its faster block times, its low fees, and its inflationary nature, which encourages spending rather than hoarding, and saw a better foundation. He saw a project that was essentially a blank slate, one that he could mold and shape into his vision for a planetary payment system. In this view, Musk wasn't just trolling or trying to make a quick buck. He was trying to hijack a cryptocurrency and remake it in his own image, to become the de facto central banker of the people's coin. He was attempting to brute force the creation of a new global currency through the power of his own personality. This campaign of mimetic warfare, this psychological operation against the crypto market, reached a fever pitch. He had cultivated an army of believers, pushed the price to astronomical heights, and become the undisputed Dogefather. All that was left was the coronation, the moment that would cement Dogecoin's legitimacy and launch it into the stratosphere. That moment was scheduled for May 8, 2021, when Elon Musk was set to host the iconic American television show, Saturday Night Live. The world was watching. His followers believed this was it, the night the Dogefather would send their coin to $1 and beyond. It was supposed to be his ultimate victory lap. But they, and he, had made a catastrophic miscalculation. They forgot the oldest rule in the market: buy the rumor, sell the news. And the soul of crypto was about to fight back. The battleground was set for May 8, 2021, Saturday Night Live. The world was watching, not for the comedy, but for the coronation of the Dogefather. The entire crypto community and millions of new retail investors were glued to their screens. They had poured their savings, their stimulus checks, their hopes into Dogecoin based on the belief that this one night, this one man, would validate their investment and rocket it into the stratosphere. The price of Doge had already surged to an all-time high of nearly 74 cents in anticipation. The $1 dream felt not just possible, but inevitable. The show began. Elon was awkward, a bit stiff, but he was there. He mentioned Dogecoin multiple times. During the weekend update segment, the moment everyone was waiting for arrived. He was playing a fictional financial expert, and the host Michael Che kept pressing him. So what is Dogecoin? Musk, in character, offered a series of increasingly elaborate, hype-filled descriptions. It's the future of currency. It's an unstoppable financial vehicle that's going to take over the world. But Che kept pushing, simplifying his question again and again. Okay, so what is it? Finally, with a smirk, Musk delivered the line that would detonate $100 billion. Yeah, it's a hustle. A hustle. A joke. In that one moment, the spell was broken. For the hardcore believers, maybe it was just a punchline on a comedy show. But for the market, for the millions of new nervous investors who had bet the farm on the hype, that word was a kill switch. It wasn't a validation. It was a confession. It confirmed the deepest fear of every skeptic, that this whole thing was a joke being played on the gullible. The reaction was not delayed. It was instantaneous. On crypto exchanges across the world, a tidal wave of red appeared. The sell orders came in so fast they looked like a waterfall. People who had bought at 50, 60, 70 cents were now panic selling at a loss, desperate to get out before it went to zero. The price didn't just dip. It cliff dived. Within 24 hours, Dogecoin had lost over a third of its value. The SNL appearance wasn't a launchpad. It was a trapdoor. The prophecy of buy the rumor, sell the news had come true in the most brutal way imaginable. The very event that was meant to crown Dogecoin as a legitimate asset had instead exposed it as a fragile bubble, inflated by a single man's influence and popped by a single word. The dream was over. The Dogefather had failed his people, and the backlash was swift and merciless. On Reddit, on Twitter, the forums that had once been shrines to Elon Musk became tribunals. The tone shifted from adoration to betrayal. People posted screenshots of their life savings evaporating. They called him a manipulator, a billionaire toying with the lives of ordinary people for his own amusement. He hadn't just made a bad joke. He had pulled the rug out from under an entire movement he had personally created. The soul of crypto, the decentralized ethos that prides itself on being leaderless and resilient, had been co-opted and then humiliated by a celebrity. It was a painful public lesson. The community had placed its faith in a central figure, and that central figure had just demonstrated on global television how fragile that faith truly was. But if the crypto world thought the SNL debacle was the main event, they were tragically mistaken. It was just the opening act. The real earthquake was coming. Just 4 days later, on May 12th, Elon Musk picked up his phone and composed a tweet that would do more damage to the crypto market in a single afternoon than the SNL joke did in a week. This time, the target wasn't the funny dog money. This time, he was coming for the king, Bitcoin. The tweet was a corporate statement from Tesla. It was cold, formal, and utterly devastating. It announced that Tesla was suspending vehicle purchases using Bitcoin. The reason? We are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. The statement went on to say that while cryptocurrency is a good idea on many levels, it could not come at a great cost to the environment. The market froze. This wasn't a joke on a comedy show. This was a direct attack on Bitcoin's fundamental process, delivered from the CEO of a company that had just legitimized Bitcoin by putting $1.5 billion of its own treasury into it. He was a believer. He was on their side. Or so they thought. This move was strategically brilliant and, to the crypto world, profoundly cynical. Musk didn't attack Bitcoin on its technology, its security, or its economic principles, areas where the crypto community would have been prepared to fight. Instead, he attacked it on a front where it was most vulnerable to mainstream criticism: its environmental impact. The ESG narrative, environmental, social, and governance, was becoming a dominant force in institutional investing. Big money, the kind of money crypto desperately needed to reach the next level of adoption, is terrified of being associated with environmental damage. Musk, the CEO of a clean energy company, knew this better than anyone. By framing his reversal as an ethical environmental decision, He wasn't just dumping on Bitcoin. He was poisoning the well for every other major corporation that might have been thinking of following Tesla's lead. He gave every skeptical board of directors, every cautious CEO, the perfect excuse to stay away. We'd love to get into crypto, they could now say. But we just can't because of the environmental concerns, you see. The hypocrisy was staggering, and the crypto community saw it immediately. Did Elon Musk and the entire board of Tesla not know how Bitcoin was mined when they invested $1.5 billion just 3 months earlier? The energy consumption of Bitcoin's proof-of-work system was one of its most well-known and debated features. It wasn't a secret. The data was public. So why the sudden crisis of conscience? Was it genuine concern? Or was it something else? Was he trying to tank the price so he could buy more cheaper? Was he facing pressure from his own environmentally focused investors who were furious about the Bitcoin purchase? Or was he, as some speculated, trying to pump a different, more green cryptocurrency that he had a personal stake in? The why didn't matter in the short term. The what was catastrophic. The price of Bitcoin, which had been trading above $55,000, began to plummet. But this time it wasn't just one coin. When Bitcoin bleeds, the entire market hemorrhages. Every other cryptocurrency, from Ethereum to the smallest altcoins, crashed in unison. It was a contagion. The market cap of the entire crypto space lost over $300 billion in the hours following that single tweet. In the weeks that followed, the crash would deepen, wiping out over $1 trillion in value from the peak. This was the true demonstration of his power. He hadn't just influenced a meme coin. He had single-handedly triggered a market-wide panic and reversed the biggest bull run in crypto history. The man who had been hailed as a visionary, a champion of decentralized finance, had now become its most powerful adversary. He had used the crypto community's own enthusiasm to build a pedestal for himself, and from that pedestal, he had just set their entire world on fire. The fight for the soul of crypto was no longer a metaphor. It was a real war, and Elon Musk had just launched a weapon of mass destruction. The fallout was instantaneous. It wasn't a slow burn, it was a detonation. Within minutes of that tweet hitting the digital airwaves, the charts, which had been a sea of hopeful green, turned into a bloodbath. A single sentence, 280 characters, had vaporized over $300 billion of market value in a single hour. Imagine the entire economy of a country like Denmark or Ireland, erased from existence between one refresh of a Twitter feed and the next. That was the scale of the carnage. People who had gone to bed dreaming of financial freedom woke up to a nightmare of cascading liquidations. The market wasn't just dipping, it was hemorrhaging. And the wound had been inflicted by the very man they had crowned their king. The sense of betrayal was palpable, cut deeper than the financial losses. For months, the crypto community had welcomed Elon Musk with open arms. They had celebrated his every meme, amplified his every joke. They made him the face of their movement, the Doge Father, the eccentric billionaire who got it. They believed he was one of them, a fellow traveler on the road to a decentralized future. But now it felt like a sham. It felt like he had used their enthusiasm, their hope, their memes to build a pedestal for himself, and from that pedestal he had just set their entire world on fire. The fight for the soul of crypto was no longer a metaphor. It was a real war, and Elon Musk had just launched a weapon of mass destruction. The digital pitchforks came out. The same accounts that had once photoshopped his face onto heroic movie posters were now depicting him as a market-manipulating villain. The charge? Hypocrisy of the highest order. How could the CEO of a company whose entire business model relied on building millions of lithium-ion batteries, a process with its own significant environmental footprint, suddenly claim the moral high ground on energy consumption? How could a man launching rockets into space, burning colossal amounts of fossil fuels for every single launch, lecture anyone about their carbon footprint? The questions were sharp and they were relentless. The community pointed out that Tesla had bought its $1.5 billion in Bitcoin months earlier. Did the environmental concerns not exist then? Or was this a convenient excuse, a manufactured reason to manipulate the market for his own benefit? The accusations flew. Was he trying to crash the price so he could buy more cheaper? Was this a coordinated attack to favor a different cryptocurrency, perhaps Dogecoin, the one he had been championing with a wink and a nod? The trust that had been built over months was shattered in a single moment. The mask they felt had slipped. They weren't seeing the visionary engineer anymore. They were seeing a Wall Street-style puppet master, pulling the strings of millions of ordinary investors for his own amusement or gain. But this wasn't just an emotional outburst. The crypto world's greatest minds mobilized for an intellectual counteroffensive. And leading the charge was a man who was, in many ways, Musk's equal in terms of conviction and influence. Michael Saylor, the CEO of MicroStrategy. Saylor wasn't just a Bitcoin investor. He was a Bitcoin evangelist. His company had become one of the largest corporate holders of the asset, and he had made it his personal mission to educate the world on its virtues. When Musk attacked Bitcoin's energy use, Saylor saw it not just as an attack on his investment, but as an attack on the fundamental truth of the network. He went directly at Musk, not with insults but with data and logic. On Twitter, the very battleground Musk had chosen, Saylor began a masterclass. He explained that Bitcoin mining is the most energy-intensive industry in the world, and because of that, miners are relentlessly driven by economics to find the absolute cheapest sources of power. And what is the cheapest power on Earth? It's not coal or natural gas plants located near cities. It's stranded excess energy. It's hydroelectric power in remote Chinese provinces that has no other customers. It's geothermal vents in Iceland. It's flared natural gas in Texas oil fields that would otherwise be burned off into the atmosphere for no purpose at all. Saylor argued that Bitcoin wasn't just consuming energy. It was acting as a global buyer of last resort for energy that would otherwise be wasted. It was a catalyst for building out renewable infrastructure in places no other industry would dare to go. He presented a completely different frame. Bitcoin wasn't the problem. It was a potential solution to our inefficient energy grids. He compared the energy use of Bitcoin to the energy use of the traditional banking system, with its countless skyscrapers, data centers, and armored trucks, a system whose energy consumption is opaque and almost impossible to calculate, but is undoubtedly immense. He even pointed out that the amount of energy used for holiday lighting in the United States every year could power the entire Bitcoin network several times over. Was that energy wasted? Or was it used for something people find valuable? The argument was profound. Musk's tweet was based on a simple, surface-level premise. Using lots of energy is bad. Saylor's rebuttal was a deep dive into thermodynamics, economics, and philosophy. He explained that proof of work, the very mechanism that consumes the energy, isn't a bug. It's the core feature. It's what tethers the digital world to the real world. It's what makes Bitcoin secure. That energy expenditure is the work that proves a transaction is valid, creating a wall of cryptographic and economic security, so high that it's virtually impenetrable. To attack the energy use, Saylor argued, was to fundamentally misunderstand what makes Bitcoin valuable in the first place. You can't have the security without the energy cost, just as you can't have gold without the immense energy and cost of mining it from the ground. This public debate between two titans of industry was captivating. It was a clash of worldviews playing out in real time for millions to see. And it led to something completely unexpected. Instead of doubling down on his attack, Musk seemed to listen. In a shocking turn of events, Michael Saylor announced that he had brokered a meeting. He had brought together Elon Musk and the leaders of the largest Bitcoin mining operations in North America. The goal was to form an organization, the Bitcoin Mining Council, dedicated to promoting energy usage transparency and encouraging the adoption of renewable energy sources across the industry. Think about the absurdity and brilliance of that moment. The man who had just been labeled public enemy number one by the crypto community, the man who had single-handedly crashed the market, was now sitting at a table, a virtual table, but a table nonetheless, with the very people he had attacked, working with them to solve the problem he had highlighted. It was a strategic masterstroke by Saylor. He had taken the energy from Musk's attack and redirected it. He had turned a hostile critic into a reluctant collaborator. Musk, for his part, called the meeting potentially promising. This was a pivotal moment of maturation for the industry. For years, Bitcoin had been a faceless, decentralized entity. There was no CEO to call, no headquarters to visit, no PR department to issue a statement when it came under fire. It was its greatest strength and its greatest weakness. But now, in the face of an existential threat from the world's most powerful influencer, the industry was forced to organize, to find its voice, and to present a unified front. The Bitcoin Mining Council was the first real step in that direction. The attack from Musk, as painful and destructive as it was, had inadvertently forced the network's defenders to build stronger, more coordinated shields. The war was far from over, but the first major battle had concluded not with a surrender, but with the forging of an unexpected and powerful new alliance. The wound inflicted by Musk's tweet was deep, but the scar tissue was already beginning to form, stronger than the skin it was replacing. This new reality was a paradox. The very man who had plunged a dagger into the heart of the market had, inadvertently, become the catalyst for its most important evolution. The Bitcoin community, often portrayed as a fractured group of cypherpunks and speculators, was now forced to confront its own reflection in the mirror Musk had held up. And what it saw was a vulnerability, a single point of failure not in its code but in its public perception. The environmental narrative wasn't just a nuisance. It was an existential threat that could be wielded by any powerful figure at any time. To survive, the industry couldn't just win the argument, it had to change the facts on the ground. And so the counteroffensive began. But it wasn't a war of memes or angry tweets. It was a war fought in boardrooms and on conference calls, led by one of the most powerful figures in the Bitcoin world, Michael Saylor. Saylor, the CEO of MicroStrategy, was the quintessential Bitcoin maximalist. He hadn't just bought some Bitcoin. He had converted his company's treasury into it, borrowing billions to acquire more. He was, for all intents and purposes, all in. When Musk's tweet hit, it wasn't just an attack on an asset Saylor held. It was an attack on the very foundation of his corporate strategy. He had more to lose than almost anyone, and he wasn't about to let the narrative be dictated by a single tweet. Saylor understood something fundamental about power and influence in the 21st century. You don't defeat an adversary like Elon Musk by fighting him in the public square of Twitter. Musk owned that territory. Instead, you change the battlefield. You pull the conflict out of the chaotic world of public opinion and into the structured world of corporate action. So Saylor did something brilliant. He reached out not to his fellow Bitcoin advocates but to the miners themselves, the very people at the center of the energy debate. He convened a meeting of the largest Bitcoin miners in North America. And then, in a move that shocked the entire industry, he invited the dragon into the den. He invited Elon Musk. This was a masterclass in strategy. Saylor wasn't treating Musk as an enemy to be vanquished, but as a stakeholder to be managed. He was acknowledging the legitimacy of Musk's concern, even if he disagreed with the way it was presented. He was saying, "You've raised a valid point. Now help us solve it." By bringing Musk into the conversation, Saylor performed a kind of corporate jujitsu. He used the momentum of Musk's attack to pull him into their camp. Musk could no longer be just a critic lobbing grenades from the outside. He was now a participant in the solution. The result of that meeting was the formation of the Bitcoin Mining Council. On the surface, it sounded like just another boring industry group. But its creation was a pivotal moment. The council's stated goal was to promote transparency in energy usage and to accelerate the adoption of sustainable mining practices. It was a direct response to Musk's criticism, a formal, organized effort to collect the data and build the case that Bitcoin's energy consumption was not the apocalyptic disaster it was made out to be. More importantly, it was a signal to the world, and to institutional investors in particular, that the Bitcoin industry was maturing. It was proactively addressing its biggest problem. The psychological impact was immediate. The narrative, which had been spiraling out of control, suddenly had a counterweight. The conversation began to shift. It was no longer just, "Bitcoin is boiling the oceans." Now it was, "What is the Bitcoin Mining Council's latest report on renewable energy usage?" The industry had seized control of the story. They were now the ones providing the data, framing the discussion, and defining the terms of the debate. They took Musk's vague, powerful accusation and replaced it with something concrete and measurable: a quarterly report on the global Bitcoin mining energy mix. This new narrative began to spread. Proponents argued that Bitcoin wasn't just a passive consumer of energy. It was an active driver of energy innovation. They pointed to miners setting up operations in remote locations to capture stranded energy, power that would otherwise go to waste. Think of a hydroelectric dam in a sparsely populated region that produces more electricity than the local grid can use. That excess energy is worthless. But a Bitcoin miner can set up a container full of computers right next to the dam, buy that cheap, clean excess power, and turn it into a global digital commodity. Suddenly, Bitcoin wasn't the problem. It was the solution. It was a global buyer of last resort for any form of cheap energy anywhere on the planet. This made building out renewable energy projects, like solar and wind farms which often produce power intermittently, more economically viable. The argument became incredibly nuanced and powerful. Bitcoin mining was a mechanism for monetizing clean energy and accelerating the green transition. This was the scar tissue forming. The industry had taken its greatest perceived weakness and was in the process of transforming it into a compelling strength. And what if Elon Musk? His tone began to change. Shortly after the meeting with Saylor and the miners, he tweeted again. This time he wasn't condemning. He was cautiously optimistic. He wrote, "Spoke with North American Bitcoin miners. They are committed to publish current and planned renewable usage, and to ask miners WW to do so. Potentially promising." He had been neutralized. He couldn't very well continue to attack an industry that was now actively working with him to address his stated concerns. He had been co-opted, and in a later statement he laid out a clear path for Bitcoin's redemption in his eyes, and by extension in Tesla's. He stated that when there was confirmation of reasonable, which he defined as around 50%, clean energy usage by miners, with a positive future trend, Tesla would resume allowing Bitcoin transactions. He had become the gatekeeper. He had set the challenge. But in doing so, he had given the industry a tangible goal. He had created a finish line. The chaos of his initial tweet had been replaced by a clear, if difficult, objective. The market began to stabilize. The panic selling subsided, replaced by a sense of cautious resolve. The price of Bitcoin didn't snap back overnight, but the bottom was in. The existential crisis had passed. The industry had stared into the abyss, and instead of falling, it had started building a bridge to the other side. This entire episode created what could be called the Musk test. From that point forward, any serious crypto project, especially those using a proof-of-work system, had to have a clear and compelling answer to the energy question. It was no longer an afterthought, it was a prerequisite for mainstream acceptance. Venture capitalists started asking about energy roadmaps. Projects began to compete on their green credentials, highlighting their low energy use or their partnerships with renewable providers. Musk's attack had forced a system-wide upgrade, weeding out the weak and forcing the strong to become even stronger. The wound had been deep, but the healing process was creating an industry that was more resilient, more self-aware, and better prepared for the future. The alliance had held, the council was at work, and the long road to meeting Musk's challenge had begun. The question that hung in the air, however, was whether this new greener narrative could truly win back the hearts and minds of the world, and if the industry could actually deliver on the promises it was now making. The industry's response was immediate and almost frantic. A green rush swept through the cryptocurrency space. Projects that were already using less energy-intensive methods, like proof of stake, suddenly found themselves in the spotlight, their marketing teams working overtime to highlight their eco-friendly credentials. Cardano, which had long championed its energy-efficient Ouroboros protocol, saw a surge in interest. Its founder, Charles Hoskinson, became a prominent voice in the debate, framing his project as the logical, sustainable alternative to Bitcoin's perceived environmental sins. Other networks rushed to publish blog posts and commission studies, detailing their minimal carbon footprints. The narrative war was on, and energy consumption was the new battleground. This period also marked a crucial turning point for Ethereum, the world's second-largest cryptocurrency. For years, its developers had been working on a monumental upgrade, a transition from the energy-hungry proof-of-work system to the much more efficient proof-of-stake. This transition, known as the merge, was a colossal technical undertaking, but Musk's tweet storm had inadvertently given it a powerful new marketing angle. It was no longer just a scalability upgrade. It was Ethereum's answer to the environmental question. The pressure mounted and the global crypto community watched, waiting to see if the network could pull off one of the most ambitious technological pivots in modern history. Meanwhile, Elon Musk didn't simply fade into the background. He continued to engage, but the dynamic had subtly shifted. The market, having been burned once, was now more cautious. His power was still immense, but it was no longer absolute. This became painfully clear during his much-hyped appearance on Saturday Night Live in May 2021. 4 weeks leading up to the show, the Dogecoin community was in a frenzy. The expectation was that a primetime mention from their Doge father would send the price to the moon, maybe even to the mythical $1 mark. The hype was so intense that the phrase "the Doge father" on SNL became a market-moving event in itself. But what happened was a classic case of, by the rumor, sell the news. During the show, Musk, playing a financial expert character on the Weekend Update segment, was repeatedly asked, "So what is Dogecoin?" After a few technical and jokey explanations, he eventually conceded, "Yeah, it's a hustle." The word landed like a lead balloon. In the world of crypto where perception is reality, calling the coin a hustle on national television, even in jest, was catastrophic. The price of Dogecoin, which had peaked at around 73 cents in anticipation of the show, began to plummet. It was a brutal lesson for many new investors. The same man who could pump a coin with a single tweet could also crash it with a single word. The SNL event demonstrated the terrifying volatility that came with tying a project's fate to one individual. The Elon effect was now officially a double-edged sword. It's also crucial to understand that Musk wasn't operating in a vacuum. While his tweets were grabbing headlines, other larger forces were beginning to shape the market. The euphoric bull run of late 2020 and early 2021 was showing signs of exhaustion, and a far more significant threat was emerging from the east. In May and June of 2021, China, which had long been the global epicenter of Bitcoin mining, launched a severe and sweeping crackdown. Citing concerns over financial risk and, ironically, the same environmental issues Musk had raised, the Chinese government outlawed cryptocurrency mining entirely. This was a seismic event. The Bitcoin network's hash rate, a measure of its total computing power and security, plummeted by over 50% in a matter of weeks as miners in Sichuan, Xinjiang, and Inner Mongolia were forced to unplug their machines. It triggered what became known as the Great Mining Migration, a massive, unprecedented relocation of mining hardware to other parts of the world, particularly to North America, Kazakhstan, and Russia. This crackdown did more to alter the fundamentals of Bitcoin's energy profile than any of Musk's tweets. It forced a decentralization of mining operations and spurred a move towards more stable, and in many cases, greener energy sources in the United States, like flared gas in Texas and hydropower in Washington. The market was being reshaped not by a billionaire's whim, but by the geopolitical power of a nation-state. So, as we look back on this chaotic and formative period, what are the ultimate lessons from the case study of Elon Musk versus cryptocurrency? First, it was a masterclass in the power of narrative. In a market as young and sentiment-driven as crypto, the story you tell can be more powerful than the code you write. Musk, with his massive platform, proved he could single-handedly hijack the global conversation. He shifted the narrative from Bitcoin as digital gold and a hedge against inflation to Bitcoin as an environmental menace. He then pivoted again, creating a new narrative around the quest for green crypto. This demonstrated that for new technologies to achieve mass adoption, they must not only be functional, but they must also win the war of ideas in the public square. Second, it exposed the profound risks of the cult of personality in a supposedly decentralized ecosystem. The very ethos of cryptocurrency is to be trustless and leaderless, to create a system that is not reliant on any single person or entity. Yet, for a significant period, the multi-trillion-dollar market hung on the words of one man. His endorsement was seen as a golden ticket, and his criticism as a death sentence. This reliance on a central figure was a glaring contradiction of the industry's core principles, and the painful correction that followed his SNL appearance and environmental tweets served as a necessary, albeit costly, wake-up call. Third, the saga acted as a global stress test, forcing the entire industry to confront its flaws. The energy debate was not new, but Musk's involvement amplified it to a level that could no longer be ignored. It forced developers, miners, and investors to have a difficult and public conversation about the long-term sustainability of proof of work. It accelerated the development of more efficient technologies and pushed the industry towards greater transparency regarding its energy sources. In a strange way, by attacking Bitcoin's biggest weakness, Musk may have inadvertently forced it to become stronger and more resilient in the long run. And finally, it taught us that markets, even ones as wild as crypto, eventually mature. The initial Elon pump was a symptom of an immature market, one driven by hype, FOMO, and a search for a messiah figure. But as time went on, the effect began to wane. His later tweets about Dogecoin or other projects still caused ripples, but they no longer created the same tidal waves. Investors became more discerning, the market became more liquid, and the institutional players who had entered the space were less likely to be swayed by a meme. The market learned to discount the noise. It began to build an immunity to the Elon effect. Today, the relationship between Elon Musk and the crypto world is more complex. His companies hold Bitcoin. His social media platform, X, continues to hint at deeper crypto integrations. He remains a powerful and unpredictable force. But the market is no longer his puppet. The great drama of 2021 was a crucible. It forged a more skeptical, more resilient, and more self-aware crypto industry. It was a painful, chaotic, and often absurd chapter, but it may have been a necessary one. The ultimate question that this entire saga leaves us with has changed. In the beginning, the world breathlessly asked, "What will Elon tweet next?" But the real question, the one that will define the future, is far more important. Has the market finally grown up enough to build a future that doesn't depend on the answer?